And hello everyone, Mark here. I want to thank you all for joining me for today's live stream. If you're new to Greenbridge Investing, welcome. Please check out our website over at greenbridgeinvesting.com, especially if you're interested in these type of signals. So for those of you that have been watching these videos on a regular basis, I'm just changing the format slightly here. Obviously, we're going to be going over the same things like I usually do, the major markets, Bitcoin, stocks you'd like to see. I'm just going to focus a little bit more on some sort of educational topic. Like in today's case, we're going to be talking about that gold swing trade that we took a month ago and how it reached its third target today. Okay, so with that being said, as you know, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, usually I go over Bitcoin first, right? And we're going to go over Bitcoin. That's why the chart is there. But I want to talk about gold first because that's the theme of today's session. Now, let me pull up that gold chart, okay? And by the way, if you have the symbols that you'd like to see or markets you'd like to see, you could put them in the channel now. And I'll get to them once I finish the regular material here. Then I'll be able to get to the symbols and markets you'd like to see. All right, now, here's the gold trade, okay? And this is why I put that picture with the, reaching the third target, because this was not an easy trade to sit through. And that's really like the point of the lesson. As you can see, this is the trade information that we sent out a month ago. That trade at 1703.5 was sent upon the close of this inside bar over here, okay? Which is what? With the high of that bar is, what is that? 1700.5, basically. This inside bar right here. So obviously we gave it a little more room. I remember when I was sending this trade out, the market was just moving very quickly. So that's why it's 1703. It was actually supposed to be slightly lower. But anyway, the point is it went to its first target pretty quickly in just a number of days, right? That first target was 1725. And as you can see, the high here was 1729 in just a few days. That's what we like to see. Now, then we had to sit through all this nonsense. Okay, all this noise. And I remember we were getting a lot of questions about gold at that time. And the thing to keep in mind in these situations is even if there's like sell signals, which there were, as long as the general idea of the trade is still intact, meaning this thing was not taking out any supports, we reduced our risk by 1/3 at that point. So there was just nothing to do but let it ride. And if you watch my videos from back then, you could go back on the YouTube channel, watch the videos. I talked about gold, each Monday, Wednesday, and Friday of this week here. And that's what I said, just let this thing ride. It went to its second target, and then it got tougher because now it was giving much clearer signals to sell. Look at this pin bar, okay? And this is what I want to point out. Look at this pin bar. Okay, high of 1779. The low was 1760. Now that thing was all over the place, okay? And it took out that low and it looked like a sell signal. Now by that point, it had reached our second target, okay? So now we were out of 2/3 of the position, which means our risk was reduced by 2/3. Now, after that, we just kept getting bullish signal after bullish signal. But here's the thing, we were not calling new trades. We were just staying in, we had 2 trades in gold, okay? And this was one of them. The other one, the target's at 1720. I don't know, was that target reached? Let's see. What's the high here? 1818. No, 1820 was the next target, so 2 points away. But the point is this, when it was pushing these highs, the range highs, okay, which was this 1765 area, we were getting questions about, should we buy the breakout? Should we buy gold now? And the thing is, our answer is no. If you're not in from this great price, this low risk price, which that opportunity was obviously very rare, now if you're buying this breakout, it may work. In this case, obviously it worked, but you're taking a lot of risk. And this thing could have easily pulled back to 1740. And we were prepared to share a new swing trade signal there and buy back in, at least 1/3 of the position, buy back in if gold gave us that opportunity. But it has not, as you can see. It just kept pushing higher and higher. So when you're in this type of situation, right, ignore the sell signals. In the same situation with Bitcoin, okay, we're getting a very similar price action type of thing, which we're going to go over. But the point is, just let it ride, Okay, the stop was nowhere near this area, and then we got this push, and here we are, right? So we reached our third target, and we're all happy. The trade is now exited, and we no longer have this swing trade in gold. But the point is, during that noise, you can't be affected by stuff you read. You can't be affected by anything. You just have to let the market do its job, all right? And if it pulls back and really gives a more dramatic retrace, that's when you start to consider things, adjustments maybe. But again, we were looking to buy. Now, one thing I want to point out with gold too was back here. This was a swing trade long back here that we missed, or we let it go because we didn't like the risk at that point, and gold gave us another opportunity to get back in. So another lesson to be learned is these opportunities are not like everyday type of opportunities. These are swing trades, and the goal behind them is to capture these type of broad moves. And this thing did its job. They don't all work out like this, but when the reward risk makes sense, which this was the range low, it made a lot of sense. We saw the potential, and that 1815 target, I mean, we don't know it's going to go there. Okay, all we know is the structure says the thing is strong, and that fundamentals also supported gold, which we don't really pay attention to for the swing trades, but it's something that is there. Fundamentals do support the situation, and that's it. You just let it ride. So I just wanted to point that out. Any questions about gold, let me know. Now, we had a lot of people get involved in who could not buy the CFD. We suggested gold stocks like Newmont Mining, KL, which is, what's the name of KL? It's Kirkland Lake, and GOLD, which is Barrick Gold. We suggested those for people who could not buy the CFD, and obviously those are doing really well with this gold move. So, there's many ways to get involved in gold. In fact, I did a whole webinar on it, which you can go check out at our website in our library. It's available for free members as well. Okay, so that's gold. Wanted to point that out. Now let's get into some of the things here. And again, if you have any tickers you'd like to see, I see we have a few in the channel here. Great. I'll get to those. Let's take a look here at. I want to go into Bitcoin next. Okay, because obviously that's a big interest, and we have a lot going on. We have a swing trade in Bitcoin, and here's the thing. So look at this, right? Same situation like gold was showing us not too long ago. A lot of noise, a lot of nonsense. Okay, a lot of bears insisting that this thing is going to go to 4,000 or 5,000. Oh, nice, Ricky. And all that other nonsense. But again, here's the thing, and this is why if you watch my trading view videos, I keep saying the same thing over and over. This is not a bearish trend. There's nothing bearish about this on this time frame. If you're looking at a 5-minute chart, sure. This lower high, blah, 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 sure. But that's day trading, okay? And we're not doing that. Again, we're looking for a broad move, just like gold. So I kept insisting that, we keep pushing this range low, but not really. We just test it. And like I said the other day in my Bitcoin video, I said that, these tails represent buying activity. That's not the sign of a bear market at all. There's nothing bearish about this. What would be bearish is we get this lower high that was established here at 9,300, and then we test 8,500 next. That would have been bearish. That wouldn't have changed the trend, but it would have been more bearish. You understand? There's a difference between trend and momentum. So we basically had that swing trade off of 92.25 off that range low area, and now it's working out. Okay, we're at 94.79. All right, so it's in the green. Cool. Is this going to be the breakout leg that takes out this resistance? It might be. All right, all this thing needs is a catalyst to really get this thing going, but we can't predict if this is going to be the breakout leg, right? No one knows. No one can. We know that there's a major resistance here between 95.64 and 10.168, and if we push decisively into that, okay, and we get some strong closes, it's very possible that we see that break. And if it breaks and closes above 10,400, you're going to see a squeeze. Not only will you see a squeeze, because this consolidation has been very long, and there is a relationship between the length of the consolidation and the breakout once it breaks out. And that has to do with the population of traders, in this case who would be short, getting squeezed on top of all the new traders jumping in, buying that breakout. But you're also going to see a lot of news. And you're going to see lots of blogs, and you're going to see all kinds of gurus coming out. I bought Bitcoin. You're going to get rich buying Bitcoin. All that stuff. Okay, that's not the place to buy it. The place to buy it was back here, right? 92.25. That's where your risk was the most attractive relative to the reward. All right. So anyway, so nothing to do in Bitcoin, but let it ride. All right, let it ride. Now, let's take a look real quick at the euro, because we have a situation in the euro as well. And after the euro, then I'm going to get into you. Oh, actually, I want to do the euro, and I want to do the Nasdaq, and then we're going to talk about, you know, all the symbols that you guys want to see. So let's take a look at this euro trade again. Another pain to sit through, right? We called this trade, what was it? Back, was it 1275 area? I forget the exact date that we sent this one out, but it was what, maybe 2 weeks ago, something like that, right? It might have been this candle here. And since then, it's just been doing a lot of nothing. But what did I tell everyone? I said, look, and especially in my recent analysis sessions, I said, look, what we have here in the euro is one of these. All right, we have one of these, which is a symmetrical triangle. Those have a tendency to be trend continuation patterns. And that's what we're now starting to get here. We're getting this breakout. Now, I talked about the inside bar yesterday. I shared that in the chat room. I said, we got the inside bar. Or was it today? I think it was today. Or was it yesterday? I can't remember. But I put that euro chart in there with that inside bar, which is still early to judge. I think I put it earlier today. It's early to judge because of this candle needs to close, but we took out the high. So this is a sign of strength here and a likely breakout. Now, the dollar, we looked at that dollar index chart on Monday on the podcast, which I had to remove because the sound wasn't working right. And that thing looked like a bit more likely to be in a bearish situation or a bearish trend. And the euro will benefit from that, obviously, the euro against the dollar. So we are long that as well. And this is just a matter of waiting. I was thinking about putting on some more on this breakout, but it's, you know, it's risky. It's a little risky, you know, putting on more on something like this because it hasn't really proven itself just yet. But you know, that's a very aggressive idea. That's why I haven't sent that out. We want to be conservative, a little more conservative. We tend to be conservative to begin with, but we want to be more conservative in these situations because anything can happen and things can change really fast. And I prefer to buy into the weakness, you know, into high probability locations rather than breakouts. It's just my style. But anyway, so that euro trade is working out so far. It reached its first target yesterday. I know a bunch of people got out, or was it Monday? A bunch of people got out of it at that first target, and we just let this thing run. So, you know, very similar to that gold situation where these instruments have noise, and you have to be able to see through that noise, or at least understand the probabilities. You know, can the thing turn the wrong way and stop out? Sure, it can. But as long as the structure stays intact, we have to give it a chance. Okay, that's the best we can do. Now, here's the Nasdaq 100 real quick, and then I'm going to get into your stocks here. Now, look at this. So yesterday we had this pin bar, okay, and I put this in the chat room. I said, watch out. You know, we got this bearish pin bar. Now, bearish pin bar is not the same as a trend reversal. It's just one single candle. Trend reversal is going to take a while. This thing really, for one, needs to test this level here. All right, this 97.50 area. That's a long ways from here, for one, and it needs to clear it. So it can do a lot of gyrating between here and there. It can pull back, pop up, lower high, pull back, pop up again, fake more people out. I mean, it can consolidate for a while, and that's what it's likely to do. So, you know, even though we're getting this attempt at a bullish reversal, it's still a very tricky area. And I wouldn't go nuts buying stocks. Unless you're day trading, that's a different story. But if you're not day trading, then, you know, the risk is high. The risk of retrace is high. And that bearish candle could be a sign, although we're not getting follow through today. One thing I put in the chat room earlier is I said, you know, it has to take out the low, first of all, yesterday's low, which it has not done. So that's the first thing it needs to do. And it can still happen, but, you know, we only have, what, 2 hours left and this thing's sitting here like this. So, you know, that's pretty much, it looks like it's just going to hold and maybe squeeze it a little higher. But the point is, it's the location you have to look at, the location. You know, this type of environment is great for day trades because you're in, you're out, and you're not exposed to the broader risk. But if this thing, any little piece of news comes out at night when the market's closed or whatever, next thing you know, you're gapped lower the next day and everyone's banging this thing out, right? That's where the buying opportunity comes in at the right location. And right now, a potential location would be here at this high, this old high, 10,150 area, basically that 10,000 area. That's the first minor, I'll call that a minor inflection point. All right, so for those that are interested in buying or waiting for some sort of decent pullback, that would be a decent, normal, actually very light pullback, okay, in my opinion. So we'll see how that plays out. But that's what I'm looking at for there. So we may, like Andrew may call some stocks here and there, but we're very careful to keep that risk at 1%. And we're very careful to take money out of the market as much as we can so that we can rotate it. At some point, this market will turn. And when it turns, we don't want to get caught with a whole bunch of positions because that's typically what will, a lot of people are going to get caught and then all that kind of stuff. Okay, we don't want to take that kind of risk. All right, so that's pretty much gold in the major markets. By the way, if you're new to Greenbridge investing, make sure you subscribe to this channel so that every time I do one of these, you get an email notification from YouTube. And make sure you like the video if you like it. Now, I'm planning to make these, like I said, a little bit more educational, where I focus on some sort of educational topic, and then, of course, cover the markets like we always do. All right. So anyway, and let me know if you like the video. So let's get into the list here. What do we have? Okay. So Ricky. Wanted to say thanks. Hey, oh, cool. All right, work. So that was Slack. We looked at Slack the other day. I'm glad to hear that. Okay, let's take a look at JMIA. Well, actually, let's take a look at work real quick. So, because Ricky's saying that work trade worked out, he was interested in work. Oh yeah, look at that. Slack Technologies. Wow, we talked about the double bottom situation, right? And see, he got that information from here. We talked about it. In fact, you can check it out in Monday's video. Just go back and look. We talked about it. But wow, nice move, right? We didn't know the news. Obviously, news is driving this thing. We didn't know the news when we talked about this. All we looked at was the location and the reward risk and the structure. All right, you can get a lot of information from that. Nice, very nice. All right, let's take a look here at JMIA, J-M-I-A. We've been, oh yeah, wow, look at that. This was another one we talked about on Monday. So for those of you that didn't see that, go back to Monday's video. It's on the channel here. It's on our YouTube channel. And see what I talked about. Again, this was the same situation as Slack Technologies, where we had a double bottom situation developing, and the reward risk was very attractive, right? So we had a position in JMIA. We've been in this stock for a while, but wow. Now, the other thing about something like this, you have to keep in mind, these are day trader stocks. So day traders are all over this. That's why you get these wild moves. And, if you're in something like this, I don't know, I forget where our targets are because this was one that Andrew basically set up and got into. But I would imagine we're getting out of some of this. Okay, a vertical move like this, the correct behavior or the effective behavior is to sell something. Not the whole position. You don't even have to sell half the position because there's technically no reason to sell. Okay, obviously, I don't need to know what the news is. Obviously, there's news when you see a candle like this. The key is don't think that this thing is going to run to 20 like the next day. You have this vertical move. That's an opportunity to lock some profit in, lock something in. If it's 1/3 the position, or maybe a little bit smaller, just lock something in. Because these things, when they run up, as you can see, they tend to pull back quickly, and you want to capitalize on this situation while you can. But in order to ride a winner, it's a good idea to hold on to some, right? And that's why I brought up the gold trade, and I emphasized that gold trade because we had targets and we rode that winner to its third target. Okay, we didn't get out of all of it on the first target. You just let the thing run. Can this thing give back the move? It can happen. That's a risk you take, but it's a little less risky if you're giving back profit. Some people may not see it that way. Some people may say, oh, I'm giving back, I'm losing money. But if you're giving back profit, you're not losing money. You're just giving back money that wasn't yours. If you don't have that kind of mentality, you're going to have a very hard time in this game. All right, so very nice there, very nice. So sold 2/3 of a swing trade there, waiting for nice, pal, very nice. That's a beautiful move there. Okay, so let's take a look at NKLA. Great questions, everyone. Keep asking. So, Nicola, this one's been on our radar too. Now, this thing, look, this thing's trying to obviously rally today, but the thing is, you're competing with this bearish structure, sort of. Now, here's the thing: the initial structure is nice and strong. That's clearly a wave 3. This is the Elliott wave structure is very clear in this thing. This is wave 3. This is typical of a wave 4. It looks ugly, it looks nasty, but it has not overlapped the peak of wave 1 yet. So it still qualifies as a wave 4, which is actually in a bullish, it qualifies as a bullish structure still, although it looks ugly. So in these type of situations, I mean, obviously this is a, it's not an overly inexpensive stock anymore. All right, it used to be, obviously. But the thing is, you're going to be dealing with these less expensive stocks. You're going to be dealing with a lot of noise because of day traders as well. In this situation, this is a tough spot to buy into, I think, because you just have the solid green candle. If you buy into something like this, just keep in mind, you're measuring your risk from this point here, which is $40. And you can't put it exactly at 40. It has to go lower. So you figure like 39 or something like that. So if you're buying this thing right now at, what is this thing, 52? You're looking at $12 of risk right from the start. That's kind of a lot for this stock. So since we tend to be more conservative in these situations, there's two things you can do. You can take a smaller position. So if your position size is normally 100 shares, you'd take something like 15 shares. Okay, but yeah, but that sucks. If it goes up more, I make nothing. Okay, but if it pulls back, you also lose very little, right? And that's what you have to focus on if it pulls back. Now, if it pulls back, you also have the opportunity to put on more shares with lower risk because you're using that $40 point as your risk reference. If it pulls back to $40, that's the ideal spot because that's where it can produce a failed low. And that's the best reward risk you can get, okay, if it's going to hold, meaning it's going to produce a double bottom. That's what you would see in that type of situation. Those are great setups if you can get them. You don't always get them. This thing may give you a higher low and then go. Who knows? This thing may make that lower low. Don't know. But at this point, I'm just telling you the risk that you're facing, okay? So, just keep that in mind. A lot of times if you want to participate, it's usually better to do it smaller shares. And if the market gives you the opportunity to buy more, that's when you consider buying more. A very common mistake is people get too big too fast. And when the broader market turns, then they're caught. And that's not pleasant, okay? So let's take a look at VERI, V-E-R-I, V-E. I think I think it was Ankit. Someone pointed this out not too long ago. I think it was Ankit, or it may have been DJ. I know someone pointed this out. I remember we looked at this thing and it was like, wow, it was a really impressive move. And now we got this nice pullback. This is a nice pullback, okay? This is what you want to see in these type of situations. You're not buying it at the peak. You're buying a pullback. Not only that, there was some consolidation back here, which means this is a structural, there's a probability that this area will hold because you had some price action back here. Not only that, but you have a pin bar today. So this is all good. Now, one thing about these single pin bars, I mean, since you're still facing this bearish momentum, keep in mind, if the broad market pulls back, this thing may test lower. But you do at least have some evidence of buying. So the way you can deal with something like this is you break out, you wait till tomorrow. That's one thing you could do. And you take out this high of 12 and a quarter, basically. And that becomes a buy signal. Now, the tough part about this is measuring your risk. And that is, you look at the low here, basically 11 and a quarter. That's not the best place to measure risk from. Why? Because it's a single candle. You have to look at the structure back here. Okay, this is going to give you a better idea. So you have to kind of look at, what's the low of that range. And you have this candle here, 1035. So that's probably a much better place to measure your risk from. Again, you don't have a double bottom here or anything. It's just a single candle. I would like to see a pop up and a retest, a higher low or a double bottom, and then that's I think a more conservative structure to wait for. But in this situation, you know, if you're interested in something like this, again, it's you're buying into a low, you have a pin bar. So you're likely to get some bullish momentum, you know, over the next day or two, as long as the market supports you in that. And I don't know how sensitive this one is to the market. It may not be very sensitive overall, but I don't know if you're going to, it's hard to say if you're going to get a nice clean leg up, you know. So again, one of these situations, a more conservative way to go about it is you go in with smaller size. And then depending on what the market produces over the next few days, then you can adjust from there, whether that's putting on a little bit more or you know, whatever. Okay. So that's, I mean, again, like the point of these videos, I'm not sharing specific trade ideas, but I am sharing perspective, things that you should consider when you're looking to put on risk in something like this. I mean, this is overall, I mean, we can't argue with the overall structure and the location. I mean, you have two things in your favor there. The only thing is it's missing, what I don't like about it is the steepness of this pullback. I like to see some sort of structure develop, but that's me. Okay, it's possible that this thing could, you know, give you a very strong vertical move initially before it gives you that pullback. So you just have to figure out what you're comfortable with in terms of size based on the risk that thing is presenting. Okay, good question on that, pal. So, oh right, NEM, yeah, NEM. Wow, yeah, NEM has been, you know, with gold going the way it's going. I mean, look at NEM. Newmont Mining, very nice. This thing has just been, you know, nice high or low. You know, even if it doesn't make that high or high, it's been doing well. Okay, all the gold stocks. So let's say, hey, bring, okay, Hamid, can you please look at CMRE? Okay, sure. Let's take a look. And I'll get to all your questions. CMRE. Okay, let's see. Not familiar with this one. But Hamid, you always bring up these unusual ones, which is good, because this one's definitely not on my radar. Now, okay, so we've seen some, in fact, you may have brought up a similar one to this recently, because I remember seeing a structure like this where you're competing with this long, this sharp bearish structure. Obviously, a lot of stocks have this because, you know, all that stuff going on in March, but this recovery hasn't been as sharp as some of the other ones. I mean, this is kind of not so great, this recovery. All right. I mean, you have the higher low, it tried to make the higher high, but what's going on here? All right. See this right here? This high right here at $5.28. That's a failed high because it sort of took out this high, but it gave it back right away. That's a failed high. Not only you have the failed high, but you know, that pretty much gave you some follow through on that bearish momentum. So when the market's been as strong as it has, I would expect strong stocks to at least be equivalent to the market, if not outperforming. So what's up with this thing? You know, why is it acting this week? That's a concern. So that's one thing I'd be careful of. Now, if you just look at the most recent structure and we forget that big, broad, bearish situation, okay, can we argue that these are higher highs and higher lows? Yes, we can, except for, I mean, this one barely squeezed by here. So this is a red flag. You have a pullback, right? And today's candle, I don't see a pin bar there. I don't see any reason to buy into this candle, except the only thing you have going for you is the location, because it's a potential higher low. But you have a lot of other factors working against you. So there's based on what I see here, there's a good chance that this thing breaks below that support, okay? Unless it can prove otherwise, right? 471, that support over here. If it closes below that, that really emphasizes this lower, this failed high situation. This basically, this basically acts as a double top, okay? And if it breaks that support, that becomes active. That sort of like activates that. And, you know, it's just there are much better charts out there than this one. So I don't know if you're in this, but if you're not in it, I would hold off until it can prove itself a little bit better. One thing you can wait for, again, pin bar off of this location where it is right now. If you want to give this thing a chance, or you want to take a risk with it, pin bar or inside bar, and then you see if this thing can give you another leg higher and where it goes from there. I mean, your potential on this thing is at 5.25. Okay, that's just proportional structure. So like I said, there are many stocks out there with much better structures. So just something to keep in mind. Okay. Thanks for bringing that one up. Now, okay. So yeah, NKLA, pal. Yeah. Well, now I don't remember what it looked like. Hold on. Let me just pop that one. Yeah. Like I said, one thing you can do with this, if you really like it and you like the stock and you have the appetite, you can take a smaller position, okay, to control the risk, because you're taking a lot. The problem with this is the risk is high, because this candle, the next, tomorrow can give it right back, right? So instead of taking a full position and the maximum risk, you take a much smaller position. So like, for example, if you normally take 100 shares, if you take 15 shares and this thing gives back a few dollars, you're not going to be so worried about it, right? You'll be a strong hand and you'll be able to make clearer decisions. So that's one way if you really want to be aggressive and get involved. Otherwise, I would wait, okay, for a slightly better setup, either a higher low or a double bottom. All right. Remember, a lot of these opportunities come from waiting, not reacting. Okay, PFE. So Pfizer, oh, I haven't seen this one in a while. All right, so this typically, obviously this is in the pharma sector, pharmaceutical, and these things are very sensitive to news. So they're not going to react to the market as much, although if the S&P has a dramatic pullback, this one will probably feel it. This is no joke, this stock, right? This is not like one of those little biotech stocks. So here's the thing. You have a higher low in place that was established here at 31.60. That's a good sign. And now you have this gap, and now it's sort of pulling back a bit here. You see that? So, and this is why, I'm not a big fan of buying into when something reacts like this, just like we looked at, NKLA, because it runs out of steam, and then you could have gotten a better price if you had just waited. So gaps tend to want to be filled, and you have this gap. So right now, I don't see a bullish pin bar. I don't see an inside bar. I don't see anything but an attempt to close that gap. That's what looks more likely here. So if you're looking for a long in something like this, I would wait. Okay, I would wait to see how it behaves around that gap. Maybe you get the reversal candle inside that gap, or maybe it tests the low again and you get a double bottom. What I do like about this stock is the general structure, because you do have a higher low in place. So that is a sign of strength. That's a good sign. And then you can measure your risk from that higher low, which is 31, 31 and a half area. All right, so right now I would just hold off on this and see what kind of candles you get over the next few days. Remember, when we're looking at is we're comparing the broader structure to the most recent structure. That's price action has a lot to do with that. Price action is a very vague term, and it can mean a lot of things. But when I use it, I'm talking about basically comparing price structures and price patterns and levels. And then we use the candlesticks to refine that even further. All right, so single pin bar candles may be somewhere you want to go with. Well, so pal, those single pin bars basically are part of our setup, right? And they let us know that something is changing, right? Buyers are stepping in, or selling activity is increasing. That's what we use that for. So it helps give us some more confirmation rather than just stepping in front of a market with like this. See, we can argue that this is sort of a bearish pin bar, but this is not the location where a pin bar should be, up here, not here. But the point is, something like this, there's no reason to buy this, right? But if I had a bullish pin bar, see here, even though it's red, it's still a bullish pin bar because the tail is on the bottom. If I had something like that here, that would be much more compelling, because higher low, and we're getting buying stepping in just above the gap. Okay, that would make sense. All right, maybe we get a little mini higher low and we get a test of the high here, and maybe perhaps break out. All the breakout traders buy up here, and you're in from a much better price. But I don't see that here. So that's why it's best to let this one give you a better signal. Okay, so Hamid. So all right, as far as that CMRE for long term, okay. So if you want to do that for long term, again, you could start with small shares. It's an inexpensive stock, so you could start with small shares and see how it behaves. But I wouldn't be aggressively putting on more and more shares until that structure improves. Okay, So you can always do a starter position very small, so that if it really pulls back to like $3 or $2 or something, you're not getting into a situation where you get emotional and then you bang it out at a bad price, because that's what happens. You get too big, and you're like, ah, this thing sucks. This thing's going to zero, and you bang it out, and that's the bottom, right? But that's an emotional reaction. If you're small, you're like, ah, well, who cares? I have a small position, and you don't bang it out, okay? And then it improves, and then you can add. So this game is mostly psychology, all right? Everyone focuses on charts and this and that and whatever, but I have to say, there's probably more than 85% psychology to do this effectively. Whether you're day trading or swing trading, really doesn't matter. All right, let's take a look at the next one here. We got a lot of stocks here. KTOS, is that the next one here? Yeah, KTOS. All right, so, oh, I put the wrong one in there, sorry. KTOS. So this one, I know Andrew's been on top of this one. I know he's talked about it recently. Now, so, all right. We had this pullback. Now, this is an interesting situation. All right. Now, let's see if you guys have been paying attention. Well, why is this situation interesting? Why would I find this situation interesting? I just want to see some of the answers that I get. All right. So why would this be interesting here? Can anyone tell me? And it doesn't matter if you're wrong. I'm not going to pick on you. This is the only way you learn. I have to challenge you a little bit, make you think. And this is how you gain experience. So, looking large scale, okay. Urban, sure, we'll get to urban flooring, no problem. Yeah, see, pal, like those cup and handle situations. I don't put a lot of credibility into those, because especially on the weekly, I like to see more shorter term structures. But that's me. I am more short term oriented. So. Okay, so let's see. Okay, so Florin, double bottom. Florin got it, double bottom. That's why this is interesting, because it's basically the double bottom or failed low developing. Now, this is where people make mistakes. And well, this pin bar, although this looks like a bearish pin bar, in this location and in this configuration, this situation is actually bullish. Okay, believe it or not. Now, where people make the mistake with something like this is they focus on the recent bearish price action. They say, well, the trend is bearish. The trend is not bearish, okay? The recent pullback has bearish momentum, but the trend is defined by the larger structure, okay, for this time frame, which goes back, to this low over here, to this high up here, right? That's the trend that you're dealing with right now. That's what's in play, and you've corrected a portion of that. Right, in terms of Elliott wave, let's see, is that a wave 4? Sort of. It sort of overlaps this wave 1 a little bit. Elliott wave is not exact, but this, I would say this can qualify for a wave 4. Wave 4s typically look like this, okay? And whenever you have a wave 4, they're usually followed by a wave 5, or at least an attempt at the high. You don't know if it's going to make a new high, but it's reasonable to anticipate an attempt. Now, just like that other stock, NKLA. See, NKLA has a situation where, it gave you that bullish pin bar to go, but what I was trying to describe is exactly what this thing is doing, right? Tries to go up a bit, pulls back, gives you the double bottom situation. This is, in my opinion, much more attractive in terms of reward risk, because you could measure your risk very easily here, and it's likely to give you a failed low. Now, it hasn't proven itself yet, but if you get a failed low, what that typically means is people are getting short, or they're banging this thing out at a price where buyers are waiting for it, okay? And once they do that and they all have to get back in, or the shorts get squeezed, that's when you get that next leg going, all right? That's a very common pattern. So I like the failed low, the potential failed low situation. The thing is, buying it right now today is a little early. I mean, what you want to see is this high get taken out, which is what, 1540? So you figure like 1550. At least that candle should get taken out. If you buy it sooner, it's aggressive, because, I mean, what if this thing takes out that support and keeps going? That can happen. So that's why, you can measure your risk from here. You figure what the low is, 14. So you figure $15 is your risk. You should give it a little extra room, like $1 maybe. So you figure your risk is going to be defined at the $14 level, okay? So you're risking maybe $2 in something like this to try to make maybe 4 or 5, okay? If that leg could get going. Now again, this is not something that's going to occur in 1 or 2 days. This is something that, you know, can take a week or 2 to play out. As you can see, I mean, look how much time from this peak. Now you know why I don't like buying peaks, especially when pin bars show up, right? See, this happens a lot. So when was this? Back in June 8th, right? That was a month ago. It took an entire month for this thing to pull all the way back from, what's the high there? $20 to this low of, so it took a month to pull back $6 basically, or $5. That's a long time, all right, to watch this thing, you know, just mess around and waste time like that. So just keep in mind, for this thing to really start going, it can take something, you know, a couple of weeks to at least get halfway there. You have to figure something like that, okay? Just something to keep in mind. And you're measuring your max profit from this high, which is $20. So, you know, like I said, you're risking 2 to make maybe 3 or 4. The reward risk still makes sense. Will it break higher? I don't know. Okay, but we want to stay within reason based on the structures that we see. All right, so thanks for bringing that one up. What else do we have here? Let's see here. Okay, I know we have another one here. Urban. Let's take a look. Now Urban, this is the, I keep putting in the wrong symbols. Hold on. I keep putting in, this is the Michael top tick stock. I bring it up all the time. You know, Michael top tick this thing. I'll show you where. So Michael had this trade. We called this trade in it, and Michael put some for sale because he didn't like the activity, whatever, and he sold it like right here. Okay, he sold it to some retail trader right there, and the Michael top tick. Anyway, so Urban. Now this thing. Now look at this thing. You have this double bottom situation, which basically played out, and it's behaving well now. Problem with Urban is if you're not in from this area, if you're not in from these lows, I don't think we called Urban again recently. I don't remember seeing that on the list. If you're not in from this, then you can't chase this. All right. The problem is at this point, you're almost in the middle of the range. All right. If you want to define the range by 14.5, right? This is the low of the range. This is the middle of the range where it is right now, basically. And this is the high of the range up here, which is what, 2260? So you can't chase this thing. The middle of the range is probably the worst place to put on a trade because your probability is 50-50. It may go higher, but it may not. And your risk is very high because where are you going to measure your risk from? You can't go by a previous candle, that's too close. You have to go by the previous structure, which is much further away. So this is not a good place to get in. Now, if you're in, great. But if you're not in, then I would wait. For something like this, this is clearly range bound. You need to wait for another range low. So, you know, what do you do in these situations? Find a better stock. All right, there's plenty of stocks. We just looked at a bunch that have much better locations. I mean, look at this double bottom back here, right? Look at that nice failed. That's a nice double bottom, right? Another double bottom over here, right? Another, and then it reacted again here. So why not find something that's giving you a much better structure than buying in the middle of the range? So that's what I have to say about that. You know, there's nothing to do. Remember, you're not always going to have, just because the stock may be running away without you, doesn't mean you're missing an opportunity. You can go somewhere else and there'll be an opportunity somewhere else. And you just leave the stock on your radar and at some point it'll give you another opportunity. We do that all the time. Okay, we miss things and then you wait a couple of weeks and oh look, there's another buy signal. And we didn't get caught in all the garbage and all the noise in between. What a lot of people, why they have such a hard time is because they're chasing stuff all the time and they're reacting. And you're never going to get anywhere that way. Okay? It's hard, I know. And discipline is not fun. It's not enjoyable. It's not easy. But, you know, if you put more stuff on your radar and you have specific setups to look for, it becomes better because, you know, you have more of a, you're more goal oriented and you put yourself in a position to anticipate rather than react. Okay, so that's pretty much, I covered everyone's stocks here. Do I have any other questions about anything? Great great questions, everyone. I really appreciate all the participation. Again, if you're new to Greenbridge, make sure you like my video if you like it. Also, subscribe to the channel so that you can get a email notification from YouTube, and make sure you check out greenbridgeinvesting.com, especially if you're interested in swing trade signals and things like that. We have a bunch of things going on over there, so please do that. Otherwise, just want to see if do I have any more questions. Also, if you put a question in the chat room, I saw we had a question from a guy in the free chat room, and I guess I must have either missed a question or I don't know where it went. But if we don't answer a question right away, please feel free to just ask the question again, because sometimes they scroll by and we don't see the question. So I want to make sure that we answer everyone's questions. It's very important. So I just wanted to leave you with that. All right. So again, thank you all. All right. I see I don't have any more tickers. Thank you all very much for watching, and I will see you in the chat room.